Hey, Pumptown and friends, welcome back to another update. I'm just going to change this to public. There we go. Hope that worked. Welcome back. What's up? What's up? What's up? So, what kind of weird shenanigans went on today? Well, I didn't really give an update publicly just because nothing's changed. We're still sitting here in this range. We haven't done much bouncing between the consequent encroachment of the weekly fair value gap and the discount fair value gap here. We could even claim this guy. I want to just tag the open, what looks to be the open. So that says on the candle 868 or something. So yeah, okay, that's it. That's actually the open. So it is an up close candle. It's gonna click on the settlement, just see if anything changes. No, not really. So the gap that we used to get up into our buy side pool was this fair value gap with that inefficiency right there. So this is kind of what we've been dangling with. Now, I wonder, that looks a little better using that inefficiency as well. So I'm gonna use that, and I wonder if I wasn't using that before because my midpoints were bang on before. So you can see the bodies respecting these specific price points right here, and the wicks as well. The SR flip of this right in here, that touch and that touch. So I really like what's going on with these levels. It has not been cakewalky, and I mentioned that on this candle here when we had the 3 retarded soldiers, that it was going to be likely a little fickle, and this is what you can expect after you've nailed some bigger time frame targets. So none of this was unexpected as far as us not making any really phenomenal dynamic ranges, but that is not to say that we haven't had trades. So let's go into this here, and we got to use the inefficiencies. So this is that weekly fair value gap. Now, in my opinion, we'll flip that, but just a little later. So the best trades the last few days have been from specifically these price points. And every time it looks like it's going to break out, it just starts kind of reversing. And so it's generating buy side liquidity here, which is awesome. It's just so awesome. In the lower time frames, it's like flagging out. And yeah, so just don't forget that the gray shaded area is from the weekly time frame. You got to use that inefficiency, but and then I'm going to paint this one, say turquoise or whatever you call that. Okay, and I'm just noting the midway point, which I got to start painting black now, huh? So middle line, there we go. Much better. Excuse me. Yeah, so the best trades to have been taken have been from these specific price points. Now, you'll notice that the higher time frames really call the shots and the lower time frames comply. So, for me personally, I'm bullish on the market. I'm not trying to call a top here. However, we could see now that we've had a higher high in the trend on the daily chart, we could then retrace for the higher low, right? So we've made our, well, the break in structure happened really here, higher low, higher high than that high here, higher low, snaps up, makes a higher high here and here. And now if we were going to continue up, we would want to make a higher low in the trend. So we're so far up in a premium that it's really tough to try and get in sync with this dip, because we don't know if it's going to come down here or just use this midway point here, dap all that liquidity right there, and then perhaps we'll make a swing low. So tomorrow is Friday. If this candle decides that it doesn't want to take that low, then we have a higher probability that upside is still favored for the following week, which is, I think, the last week of May. Correct me if I'm wrong. If that happens, then we'll still look for some higher repricing. Now, if we take that low tomorrow, then we would probably start aiming for this liquidity void. And that's a new week opening gap. That's not just a new day opening gap. So a little stronger in... It's just kind of stronger, but in a weird way. It's like it can travel to a new week opening gap from really far away, whereas the new day opening gaps we use intra-week and only if they're close by. So that's kind of how I can explain it. And that's just from what I've seen so far. So the thing about this swing low getting pierced is this the liquidity sweep, or did we short-term shift structure? So let's go to the 4-hour chart. There's no fair value gap here on that to claim a bearish 2022 model. So I'm just going to take a peek at the daily chart and notice that there is no gap. Just going to double check. No, there is no gap. So I don't see this being a shift in structure. I see this being a big giant idiot box. And the pool of liquidity from this bull flag is here. Now that's not a traditional bull flag. That's like a kind of a Jesse Livermore cylinder or a reversal diamond-ish. Especially like in a daily chart or I don't know, maybe 12-hour chart. But the people that are looking at that as a bull flag, it's generating liquidity is what it's doing on both sides of the market. You can see the equal highs and the equal lows. So if it starts traveling down and takes out that swing low, then I'm going to be aiming for down into here. If we flip this specific price point here into resistance, I'm going to be aiming for here. Michael, Mr. ICT, was saying that there could be like an intermediate shift in structure here, just a couple of weeks of downside, which would make sense. So I typically heed what he says, but I don't put a lot of weight on it because nobody's perfect, and eventually you're just gonna have to fade us because we'll get in your way. This is how it is. You gotta have your own confidence and your own analysis, no matter what anybody says. Me, ICT, Sam, you got to have your own. You got to be your own person. So this is looking pretty bearish, actually. Oh man, I would like to see that remain intact, but you drop into a 4-hour chart and things get a little bearish looking. So this high here came within $5 of this high here. So there's buy side liquidity being generated right now. Basically, I'm just gonna go out on a limb and say, you know, it looks like it at least wants this. So if we get down into here, we'll determine what might happen next. But this is looking more likely the more that we break things. So I'll be counting PD arrays here to see if it's gonna come down. But let's keep it real simple. We'll go back 20 days. And yeah, this candle here. Okay, so that's the impulse here. And we do in fact have a swing high created. So we could see some discount arrays. So this would be our discount inefficiency. That's not off the table. Now, if it's not going to come back, it's not that it has to come back down there. You guys need to understand this. Okay, I'm just gonna delete some of this for a minute. So that's the 20-day IPTA look back. Just noting at fair value, there's a fair value gap. So anything in a discount would be great if we get it. Now, just because price could be turbo bullish and it could want to come up one more time, I'm going to just delete the discount. And now I have my customized premium and discount, and this would be fair value or equilibrium. And there is a fair value gap here. So I'm going to draw that out. And I'm noting that we can't close below consequent encroachment. So at the moment, price is showing me relative strength. Yes, we've wicked through here, and that's fine. But the bodies is really what's given us the gold. So when this one came down, it closed here. When this one came down, it got snapped, you know, wherever it did on the high there, yeah, up into the bearish order block, premium. And it did come down into the fair value gap, but still closing well above the midway point and the upper quadrant of this gray shaded area. Right there. So that's, if you split this whole inefficiency into quarters, it's showing strength. So maybe we could, if it wants to run out buy side liquidity, there's a chance that we use that. Maybe that. If we hold the midway point, beautiful. We could create a swing low, 1, 2, perhaps 3, and then next week just start working our way on up. So that right here is my equilibrium. What else is in the discount? That's pretty much it here. So I'm going to go to the 4-hour chart. What else is down here? There's a propulsion block here. So that's cool. I'm just going to take a peek left and see what else is in here. So there's this guy here. That is some kind of weird gap that I've never seen before. Some kind of secret gap. Now these can disappear on me, so I'm just going to mark it. And this has happened before, where I just find these gaps all of a sudden and then they disappear. So I'm going to keep that on the chart for the rest of the week and paint it Turquoise. Holy moly, why? That's funny. Boop. So the algorithm obviously likes that, so I'm going to keep that for support and resistance ideas. And that would be in the discount of our premium and discount of the premium market. If we get down in here, then I'll start worrying about levels down here. But this is kind of how it was taught to me. Because even like if you notice on Bitcoin, if you trade Bitcoin, you'll notice that we don't get a lot of deep dips. And the reason why, it's in a buy program. So when it keeps repricing higher without any real deep retracements, it's still retracing. It's still doing a shy stop hunt somewhere. But you got to split your premium market into its own, just like I'm doing here. And then you can find the best is you just got to forget that you pumped this high and just keep it simple. And it's all about knowing your model and the time it's going to deliver. So I wouldn't mind another dip. If we do one, whatever, it's fine. Again, if we start trading beyond this, then I'll start marking up discount arrays. So as of now, this is it. Sorry, I don't have a lot for you. Obviously, in the daily, there's a bearish order block looking thing. So typically, if we were playing this, if this came up and stabbed a 15-minute pool, or let's say a 4-hour pool liquidity, then made a bearish order block, yeah, typically we'd be short on that to the discount. That's just how it works. So we'll see which discount it wants to use. And I want to add this one back here. So this is from the daily time frame using this candle's body low to this candle body low. Yes. And it really likes it. So I really like it. And was it that one? Yeah, it has to be. Man. I don't know, I just like that better. Or was it this guy here? There we go, that's it. That's it there. It just really respects those levels, so I like it. It just comes with experience, I guess, and of course, there's always room for improvement if I get it wrong, but like it looks pretty salient to me. So just to show you one more time, that weird looking block of candles here, because they're all gappy and that's a fair value gap, this whole thing is a gap. And then that turquoise one, don't worry about it if you didn't pick it up. And just where we are at in the 20-day look back, so far, our fair value gap. And we also have this one. That's crazy. So I want to go back to the 4-hour. Man, it looks like we're going to tank. So be prepared. Everybody's super turbo bullish right now, who have been stopped out of shorts and looking to break out bullish. It's just natural that we'd want to trade down for a little bit. You know, how much do we trade down? I don't know, but typically if there's a run up coming, it comes down and stops the low. So that's what I'd be looking for. Like, look at that. Look at that. Every single time it wants to rip, it dips real hard first. And it's like, oh, gotcha, sucker. Oh, was your bearish engulfing candle on the 4-hour chart? Did that hurt you? Did it break you? Is that a breaker? I don't know. You could argue it. That's definitely a breaker. Oh, did it break you? That's funny. That's so funny. Why is it so perfect? I don't know. But they start chasing because of the big selling pressure, right? And they're like, oh, look at this deadly SR flip. Whee! And then, hiya! And then they're like, oh, there's no way. That's what they say. It's so funny. They're like, there's no way it's going any higher. And then it goes really, really higher. And they don't know what to do at this point. That's the disbelief phase. Don't get caught up. But yeah, so it looks like it's going to dump. And I don't mind being offside. I'm flat tomorrow. I'm good. My members know what happened. I had a little accident on Thursday, and I was able to recover quite nicely today. A lot of it. So, well, not a lot, but a nice chunk. Just sticking to the higher time frames really gives you a sense of mental comfort. If you just stick to these levels and look for your model off these time frames, like off, oh my gosh, it doesn't matter what time frame you're playing. If you have an order block in the 4-hour chart or a fair value gap and you touch it and it makes your model, then you have a really solid trade. Pretty much, and 4-hour chart and above. Anything beyond that is, like, in my opinion, it's kind of gambling. Like, you can get in sync with order flow if you know how to read it, sure. But, like, you know what I'm saying, though. The days, like today, let's just go over today for a minute here. Look at how much today sucked. Like, if you weren't in off the discount array and holding for premium targets, it was really, really hard, wasn't it, you guys? Yes. The right answer is yes. Because I mentioned this to you many times. 11 is your stop hunt time. That's where you stop hunting. Typically. If it doesn't do this by 11, then you could still maybe push it to noon. But once it does this by 11 and you miss it, if you need to trade, not that you have to trade. I'm talking about you're looking for a payday. It's the last few days of the month. It's, you're looking for quota. You're almost there. Your model's present. Everything's cool. And then you know what it is to be content with your payday. Well, son of a gun. If you tried looking for a trade after 10 a.m., you typically likely didn't do very well. The lot of you. And the reason why is because I could see it in the chart. It didn't want to run. It just wanted to be a complete butt face all afternoon. And then this grand finale finally come up, tickle my target from the PM session, and then just slam for the double bottom. Holy rude. And some of my people caught that. You guys, that's hilarious. You guys are doing great. But it didn't just slam somewhere random either. Look, it went to the quadrant of the higher time frame. Rawr! It's so awesome. Once you hit these suckers, you guys could have a serious good trade. And the whole point was if you ever have an accident, if you ever hit a tilt button and catch yourself and you're not fully blown out, trust your analysis off of the higher time frames instead of just going, oh yeah, well, it's after my time to trade and I missed the move for whatever reason. Maybe you got stopped out or whatever. There's no higher time frames for you to key off of at your time to hunt anymore. It's done. And that's what you can literally eliminate a lot of heartache and a lot of losses by just studying this and watching everybody else get squished. I had an account loaded up with my peeps, but I didn't touch the button. It was just being dumb. Plain and simple. And when it's like that, you got to know when to walk away. So it looks like we are getting a nice little dumpsky poo here. 8 till midnight tonight. Pay attention to that profile. I'm looking for a friggin' Hail Mary tomorrow. If I get it, then I get it. I really want it to make a higher high. It's made a higher time frame discount repricing Thursday low of the week. We could get a seek and destroy bullish profile midweek reversal and come run out these. So that's personally what I'm looking for tomorrow. The conditions are that London doesn't do much. Asia can kind of muck around, but London session, I don't want to see it hitting the 1/3 5 ADR. And the price action profile between 5 and 7 a.m. needs to be next to flatlined. So those are my conditions for why I'm not entering a trade tomorrow. Okay? There's a trump card, obviously, if a higher time frame discount array or pool of liquidity has been breached. Let's say price action tomorrow comes down and hits here and takes out liquidity at the time I want to see it, and my model's present, I will then engage with price and put up risk. That's the only thing that really trumps the reasons why I'm not looking for a trade. And it's just because the higher time frames are so powerful. So if London's already doing wild stuff and New York's just a big continuation of London, I'm just going to be if I'm bullish and we're above the open for London or for New York tomorrow morning when I wake up, I'm not interested. I'm just going to tape read, and again, gun to my head, this is where I want to see price. Excuse me. This is where I want to see price go and have that low remain intact. But I am okay with being wrong, and I'm basically not looking for anything tomorrow unless it's perfect. Just like, and that should be standard for every day. Don't go hopping into the charts in the morning going, oh, it's going to be perfect today and I'm going to be on side. Just be like, okay, today's going to suck. And if it doesn't suck, then great, there's a trade. That little mental shift will help you so much in the sense that you'll snowball effect your experience, your expectations, your patience, and all those things that just choke traders out. So that's my advice for you guys for tomorrow. That's what I'm doing. Keep it real. We'll go over next week's folders on Sunday. And hello. Yes, Last Lap knows what's up. Hey, what's up, Lydia? The retarded soldiers. Oh, yeah. All three of them. I'm the tall one, though. God bless you guys. Thank you for joining, and we will see you tomorrow. Peace.